Today, Galaxy Digital backs out of buying BitGo. The Acala stablecoin crashes to a fraction of a penny thanks to hackers. And why is Avalanche considered an Ethereum killer? We take a deep dive into the protocol. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital assets are in the red to start the week, even after some strong weekend gains. After crossing $25,000 on Sunday, Bitcoin dropped to $24,000 by noon Eastern. Ether traded around $1,900, while Polkadot sat around $9. All right, on to the top stories. First, Galaxy Digital is giving up on its plan to buy BitGo. Galaxy said in a press release that the startup hadn't provided financial statements from 2021 by the July 31st deadline. The company also said it wouldn't pay a fee for breaking up the acquisition. Galaxy first offered to buy BitGo for $1.2 billion all the way back in May of 2021. Next, another stablecoin crashed over the weekend thanks to a hack. The Acala stablecoin just launched a new liquidity pool, which is a pile of crypto attached to a smart contract. Acala said the hackers used a misconfiguration in that new liquidity pool to mint nearly 1.3 billion AUSD tokens, sending the price crashing. By Monday morning, the token was worth about 0.9 cents. Polkadot, the network that Acala runs on, tweeted that shared security between the networks was not affected. Last, Do Kwon of Terraform Labs just gave his first public interview since the collapse of Terra USD. Speaking to Coinage, Kwon said that he alone was responsible for any weakness that would have let short sellers take advantage of the protocol. He also said he would be, quote, totally honest with investigators and accept whatever consequences were ahead. Terra faces probes in South Korea and the United States over alleged fraud, along with a class action lawsuit from investors who lost billions. Okay, for our main story of the day, we are turning our attention to Avalanche. The protocol, which launched back in 2020, had amassed 400,000 active addresses by the end of 2021. Avalanche claims it can handle an infinite number of transactions per second to meet all that demand, thanks to its use of something called subnets. Crypto World's here to break down how those subnets work and why some think Avalanche is an Ethereum killer. There's a fast-growing number of blockchain projects in a race to overtake Ethereum. And each crypto project has a specialty. Some look to improve transaction speeds, others put a strong focus on security. Then there is Avalanche. Its focus is scalability, specifically through something called subnets.
Subnet is short for a subnetwork. It's a dynamic set of validators, at least 5, that work together to achieve consensus on a blockchain or a given set of blockchains.
The Avalanche network is actually made up of 3 different blockchains. X-chain handles transactions, C-chain handles smart contracts, and then there's the P-chain, a platform chain that operates subnets and where validators stake their AVAX.
So a subnet is actually a layer 1 that sits on top of Avalanche. So it has its own self-sovereign capabilities, its own security, and settlement happens on the subnet.
These subnets are independent networks operating within Avalanche's P-chain. Users can create subnets to utilize Avalanche's blockchain technology without having to develop infrastructure from scratch.
What those subnets allow you to do is for the applications that demand even higher throughput, right, or want to have a more fine-grained isolation of their resources, they can then go and create their own subnetwork, right, where their code will be run. They don't have to compete for hardware resources with potentially many other applications.
But what makes an Avalanche subnet different from Ethereum's scaling solution or other layer 2 platforms? First, it is a lot easier to get started.
With Avalanche, you get the proof of stake snowman consensus mechanism out of the box. You're not jumping around from one network to another. You're not doing anything in a way where you have to create smart contracts to validate the stuff. This just happens naturally in that network. It's much simpler and streamlined. Everything kind of happens in-house on Avalanche.
Whereas on Ethereum's layer 2,
Layer 2s usually are more centralized, and then they settle back on the layer 1.
Basically, with certain types of L2s or layer 2s, you need to have a smart contract on the layer 1 that can validate that all the transactions that happen on the layer 2 are actually non-fraudulent. and that are valid and that they've actually occurred properly. And then you have to roll all of these transactions into one and then submit it to Ethereum.
Second, proponents say Avalanche's subnet is much more customizable.
The customization is actually very appropriate for the validators because certain enterprises who need regulatory compliance have a different need than a crypto native gaming company that has rapid transactions and that needs a faster execution environment.
Let's say a business or government wants to use blockchain technology. They can create a subnet and come up with their own unique rules ideal for their governance. They can create a subnet that only allows users to transfer funds until 6 p.m. or only allows U.S. citizens to validate transactions. They can even choose between proof of work or proof of stake and create their own token.
You can configure how the consensus mechanism works, like how many rounds of sampling of the group of validators you need to prove that a transaction is valid. What are the positive consequences and negative consequences of a situation like that? Does your subnet have its own custom token? What is the finite supply of that token? Can it be used to stake and be used as a reward for securing your network as well?
These factors have led some to call Avalanche an Ethereum killer, but its founder disagreed.
We think there's a symbiotic relationship between Ethereum and Avalanche to grow the ecosystem together. There are different use cases now developing on different layer ones, different communities building on different layer ones. So all that can be symbiotic for both sides.
Avalanche's past collaboration with the collapsed algorithmic stablecoin Terra Luna may raise some eyebrows. The two projects swapped $200 million worth of their tokens back in April.
So right now the exposure is down to a third of the original exposure. So 2/3 of the exposure was already unlocked. And obviously Terraform Labs and LFG had sold what they needed to sell. And obviously that did create some underperformance on the Avalanche side. With that said, the remaining 1/3 that is locked up at its current prices are less than $30 million using current prices. So, and keep in mind that close to $1 billion of Avalanche is traded in a 24-hour period. So it's a relatively small percentage left that's locked up for another year.
Many of Avalanche's backers aren't fazed by Terra's collapse.
I mean, I don't have any concerns, right? I think Avalanche, is still pretty strongly positioned in the whole market, right? And, as an asset and as a network platform itself, I don't have details about their, finances, but I'm pretty sure the guys are kind of smart and kind of doing the right decisions.
So what's next for Avalanche?
I think Avalanche is set up nicely to continue to be one of the premier winners in DeFi, in gaming, and also now NFTs. But personally, what I'm most excited about is the real world assets that's now deploying on Avalanche. We've had great partnerships with Deloitte. We have partnerships with lots of funds who are trying to tokenize their LP interests, either partially or the entire fund. Also, we're creating new markets. We're partnerships with players like Intane, which are creating structured products on chain, on Avalanche in the subnet function. We're really excited about all of these, call it real world assets coming to the blockchain.
We're still trying to figure out how does ultimately the infrastructure look like to enable, billions of users to transact across all this, right? And I do think that one of the critical answers to that is to having a very strong horizontal scaling strategy, right? To allow for more applications to exist in your ecosystem. And I think with subnets story, Avalanche is actually incredibly exciting because it has this horizontal scaling strategy.
Okay, that's all for today, but we are back again tomorrow and we'll see you then.